It's one thing to see JP Morgan and Wells Fargo. It'd be another thing to see, I don't know, pick your random company, Smuckers, putting money into Bitcoin.
Right. I mean, as it stands, we obviously know MicroStrategy owns a lot of Bitcoin, but as for other companies holding it on their balance sheets, I think that is a far off thing from happening, unless the CEO or founder or the board has been very outspoken about it. I don't expect them to own a lot of Bitcoin, if any, on their balance sheets. Again, like, a lot of people argue that crypto is very early, and I find that sentiment kind of like overused and overplayed, but in a way it's very true.
GM, everybody. Happy Monday. Welcome into another crypto news recap. I'm the host of Coinage, Zach Guzman, coming to you live from our Brooklyn studio, joined elsewhere in the great city of New York. She's over there in Manhattan. Today on the show, we got Jackie Melinek coming to us as no longer a TechCrunch reporter, but now a founder herself at Token Relations and also the award-nominated host of Talking Tokens podcast. Jackie, it's good to see you.
It's good to see you, Zach. Thanks for having me on today. And that's quite the nice introduction. Thank you.
Yes. Well, it's a big change for you. I'm excited to have you on, not just to talk all the big stories in crypto, but also to get into what you're doing with Pomp at Token Relations, because I think it's super exciting and we got to unpack why you jumped from TechCrunch into doing that. But it's exciting.
Of course.
It's very
Happy to do that.
Before we get into that, though, we got to recap everything else that's going on in crypto, and super stoked to have you on to bounce, I guess, all the commentary and all the big headlines off of you, Jackie, because we're going to start with just where Bitcoin is, because it's been, kind of a weird couple weeks. But right now, Bitcoin holding pretty steady above 62,000. And, we always look at the inflows, because right now everyone's talking ETFs, and the CoinShares report showed that inflows are back after 5 weeks of basically outflows. So I think there is still some excitement around these ETFs, and I don't know what your sense is, because you've been through a few cycles before. What do you make of kind of where we're at right now?
Yeah, I think, with the spot Bitcoin ETFs, these vehicles definitely had some hype early on, and we'll see growth and then lulls and then a bit more growth. And that's kind of what I'm hearing from experts in the space. I know the 24-hour volume for the spot Bitcoin ETFs was $2 billion, with obviously Grayscale, BlackRock, and Fidelity leading the pack in that order. And I think also last week, what we were hearing from traditional financial institutions in their SEC filings holding these spot Bitcoin ETFs is definitely helping the inflows to the space.
Yeah, we're going to get into that in a sec, but I do feel like, I don't know, so many people normally are stoked about the halving, and obviously it hasn't been that long. Normally it takes a little bit of time before we see kind of the blow up in last cycles, but a lot of people have been making quite a bit of the way that these ETF launches maybe, I guess, tweaking some of that historic Bitcoin cyclicality, if you want to call it that. I don't know how different it is when we have, a bunch of money flowing in via these ETFs to maybe steal the thunder of the halving, but I think maybe it just takes some time for people to see that play out. I don't know.
Mm-hmm. Yeah, and also on the point of the Bitcoin halving, I'm pretty sure there's data out there that shows in the 100 days following the halving, the price didn't move more than like 5%, maybe 10%. So really, it's kind of like a neutral playing field right now based on historical data.
Yeah, we talk about, I guess, the other thing that people are watching in that inflows report from CoinShares, which we just showed, that's basically the net inflows. And right now in 2024, it's mostly been led by Bitcoin, thanks to the ETFs. Jackie, it's been a while since I've chatted with you about crypto things, but the one thing elsewhere in that report is basically that Ethereum's just sitting there as everyone realizes we're probably not going to get the Ethereum ETF come end of the month, as we're waiting for that to be approved. I don't know where you are in that camp, because I think on late Friday we saw a couple tweaks to the filings around staking in those ETH ETFs. And I think, I don't know, I'm pretty sure I speak for everyone in the space where we're all on the same page that they're not happening. And people are down about that. But when you look at Ethereum, I do wonder if maybe at some point, some of all of that has to be priced in and people start to say, all right, Ethereum's not completely dead. It will come back from this eventually.
I'm pretty sure the ETH maxis won't let it die. And also, there's so much interest from financial institutions and just in general in Ethereum. All the developers, well, not all, but majority of developers are building on Ethereum. I don't think it'll die. But on the point of the spot Ethereum ETF, I don't think we'll get it by the end of the month. There's definitely been delays there. Who knows what the timeline will be? I know Bitwise's CIO, Matt Hogan, said he thinks the ETH ETF will launch at the end of Q4, which, to be fair, that would give a lot of space between the spot Bitcoin ETF and the spot Ethereum ETF to kind of give Bitcoin that almost a whole year to grow and shine on its own. And whether or not the SEC will approve this by the end of the year, we'll see. Obviously, they've had their fist up, quote unquote, with the crypto industry as it recently issued that Wells notice with Robinhood and continues to delay applications for the Ethereum ETF approvals. So I think a lot of it is just a waiting game, and it's going to be a lot of back and forth between the legal teams.
Yeah, a lot of people had mentioned that if they did get approved, basically so close to the aftermath of the Bitcoin ETFs getting approved, it would kind of be a lackluster debut because so much of Wall Street has been allocating to Bitcoin. And maybe it's a good segue, Jackie, into what you mentioned there in terms of these. I don't think I can call them banks necessarily. Obviously, when you hear the names, you do think banks because we're talking JP Morgan and Wells Fargo. But it is essentially, the funds and these financial players. We'll call them Wall Street giants if we want to call them that. But they have now disclosed allocating to several spot Bitcoin ETFs. You mentioned that. So we'll start with JP Morgan. Cointelegraph was writing up where they went. Obviously, it is a huge name, and they have a lot of money, $2.6 trillion in assets, but not a lot of money necessarily starting out in these positions, only about a little bit under $1 million in Bitcoin ETFs. But I could say maybe that's just dipping a toe to open a door to a larger allocation moving forward. I mean, what do you make of these first filings that we're seeing, first disclosures from some big names scooping up Bitcoin through the ETFs?
Yeah, that's an optimistic take. But I think dipping a toe is definitely the way I would look at it as well. And it's just kind of putting exposure into the space, especially for this new vehicle. It just launched like 5 months ago, and JP Morgan holding investments of about 760,000 in spot Bitcoin ETFs across 5 of the 11 spot Bitcoin ETFs out there. I think it's kind of testing out the waters on what is available, which one of them is good, and just also just getting a pulse on the industry. I know their CEO, Jamie Dimon, isn't a huge fan of Bitcoin, but JP Morgan as a whole, they have their own blockchain, and this is kind of maybe just a chance for them to get into the space. It's a small amount relative to the size of the bank's AUM, but it's still exposure nonetheless, and it's not something to just glaze our eyes over.
Do we think that, even last week we were talking about Jack Dorsey's plan at Block in terms of kind of laying out the playbook for other corporations, not even necessarily banks, but other corporations to hold Bitcoin on their balance sheet. That has been kind of one of the narratives that I think has been lost in 2024. Of course, you've got the Bitcoin ETFs. We talk about that so much to open the show. But then you've got kind of sovereign states like El Salvador and companies allocating to Bitcoin, which we really haven't seen outside of people who are already kind of orange pilled like Dorsey. But I do wonder maybe if that is something that could be kind of the overlooked catalyst in the back half of the year, or maybe that's just, again, wishful thinking on my part. I don't know where you fall on that because, it's one thing to see JP Morgan and Wells Fargo. It'd be another thing to see, I don't know, pick your random company, Smuckers, putting money into Bitcoin.
Right. As it stands, we obviously know MicroStrategy owns a lot of Bitcoin, but as for other companies holding it on their balance sheets, I think that is a far off thing from happening, unless the CEO or founder or the board has been very outspoken about it. I don't expect them to own a lot of Bitcoin, if any, on their balance sheets. Again, like a lot of people argue that crypto is very early, and I find that sentiment kind of like overused and overplayed, but in a way it's very true. And maybe down the line in a couple of years time, we will see more companies holding on their balance sheet because it would make sense. But for a lot of these Web 2 companies, they don't see the value in it yet. So why should they jump in?
Yeah, no, I don't know. As we saw last week, when a commencement speaker, I guess it was last weekend, mentioned Bitcoin and got booed, a lot of people did react the same way, which is we are still early. But you are right. I mean, we'll just cap it with the Wells Fargo mention here because I have it up, Texas. But the idea of 143,000 coming from them into these Bitcoin ETFs as well. Again, not a huge amount, but at least perhaps early in these banks dipping a toe in Bitcoin. The other thing, Jackie, that we were watching comes in the world of politics, and it was kind of the talk of the town this weekend. An op-ed in Blockworks kind of bringing back up what we saw play out last week in Donald Trump saying that he's good with crypto. And I'll just bring up the op-ed here from Blockworks, and I know you used to work at Blockworks a long time ago, titled, "Only a Fool Would Vote on Crypto Alone." And I want to set this up just with that clip in case people didn't see it, with what Donald Trump said at a event for Trump card NFT holders in Mar-a-Lago, I believe. But we'll just play a little bit of him distancing himself from President Biden and his administration for what Donald Trump said to get everyone riled up. Here's what he had to say.
Biden doesn't even know what it is. If you ask Biden, sir, are you for or against crypto? What's that? What the? Get me off the stage. He's saying, get me off the stage. No, he has no idea. But look, Gensler is very much against it. The Democrats are very much against it. And I say this, a lot of people are very much for it, probably a lot of the people in this group, and I'm fine with it. I want to make sure it's good and solid and everything else, but I'm good with it.
Jackie, Politico also covered a little bit of this as well. So it's not just Blockworks, it's not just crypto Twitter. This is now, I think, crossing over into the mainstream political coverage. Their headline was "Crypto is Trump's New Weapon Against Biden." Curious to have your take on kind of how politicized crypto has become in 2024.
Yeah, I think there's a lot to talk about here. Trump's commentary obviously gave an extended reach into the community that didn't really know which side was pro-crypto. Sure, there are Democratic government elected officials who are vocal about their neutral or positive stance on the crypto innovation, like Kristen Gillibrand and others. But Trump planting this flag in the ground is kind of putting them, the Republicans, on that positive side, especially as the SEC chair, Gary Gensler, who was a Biden nominee, has definitely cracked down on the space. The White House has also threatened to veto a bipartisan House legislation that could undo the SEC's guidelines, not in favor of the industry, which we saw last week. So as more things tighten on the industry under the current administration, I'd imagine the more constituents look to the party playing in favor of crypto. Also, on the note of the Blockworks op-ed, only a fool would vote on crypto alone, I think, the beautiful thing about America is you can vote on whatever you like or not at all. And a lot of people are one-issue voters. I think calling people fools for that move is kind of like a sensational commentary, but it got a lot of flack on the crypto Twitter scene because for a lot of people in this industry, this is their whole livelihood or it is their full hobby of interest. So it is important to them. And as someone who is building a company, I'm based in obviously New York, as you mentioned, this is important to me personally. And I don't think that being a one-issue voter is the end-all be-all. And a lot of people do that.
Yeah, and I think it's also like you said, SOB 121, that rule essentially making custodians hold equal reserves. If you have $1 million in Bitcoin, you have to hold $1 million in reserves to kind of back that. Not only is crypto against that, but also banks are kind of upset with the rule because they themselves can't get into the custodian game. And so it was interesting to see, I think it was like 21 Democrats who sided with the Republicans in the House vote to repeal SOB 121. And then you had President Biden and his administration saying they would veto it if it did get past the Senate. So, a lot of people might say, look, Gensler is not Biden. But at the same time, they're playing off the same playbook to really kind of lead the charge against crypto in the US. And so there is some truth to the idea, especially if you have Trump saying he's good with it. If you believe that, which I think we have seen candidates in the past maybe co-opt a little bit of crypto to win some votes. Mm-hmm. Not pointing fingers at RFK Jr. at all. Maybe I am. But it's unclear if he will deliver what I think the crypto industry wants, because who knows? Unless, maybe Jack here in this camp too, that perhaps Hester Peirce, and she was a little bit mum's the word when we asked her last time she was on Coinage about if she would want to lead the SEC under a Trump presidency in 2025. And I don't know, I think that might be one of the easiest ways to undo this kind of war on crypto that Gensler's involved in. Obviously, Elizabeth Warren's involved in, and now Biden himself, via his administration, may be involved in.
Yeah, I think Trump's stance, he said, I'm pretty sure if you're in favor of crypto, you better vote for Trump. And that is not me telling your audience that, but that's direct quote from him. And I think it's a big change from the criticism he put out during his first term. Now he has his own NFT collection. Last summer, he owned millions of crypto, like millions of dollars in crypto in a wallet, I'm pretty sure. So it's quite the 180. And it could be a point of importance for this election cycle. A poll by the crypto firm Paradigm found earlier this year that over 48% of people are in favor of Trump, those who own crypto, opposed to 39% for Biden, and the rest were just undecided. So I feel like it was already kind of in the camp of crypto people are a bit more Republican. And so Trump saying this kind of just skews that even further, I'd imagine.
Yeah, I mean, obviously you and I don't cover politics for a living necessarily, but I don't think you need to know that the crypto camp does skew, if not is fully represented by libertarian ideals. And I suppose that there is probably more to be gained by Trump embracing crypto than not. Particularly, by the way, I think if you look at younger voters, they usually don't show up. But like you said, if they're one issue voters and they want to get out there to defend crypto, then I think there could be a lot of that. I don't know if you agree, Jackie, but it is always kind of interesting to see Coinbase leading the charge with Stand With Crypto. They're kind of like, advocacy arm in whether or not, I think the numbers are like more than 500,000 at this point or something around that people are in that camp and Stand With Crypto. And I don't know if those are true, like hardcore advocates for crypto, or if they're just there because maybe they minted an NFT and got like a freebie or like are there for airdrops, because I fear that that's a lot of the space and they won't show come the election.
Yeah, I think a lot of people feel this way. You see people show up to protest for any issue across the board, not just crypto, and they don't end up voting. And then these people are the ones who complain for years to come. I think getting people to vote is a completely different ballpark than just having people tweet out like, I stand with crypto. On the front of Coinbase, I don't know if those metrics are fully accurate of like US citizens, or like you said, they are just people who wanted to be a part of it. I think it's millions of Americans who own crypto, but do those millions of Americans care as much as like a certain percentage do? Is it their livelihood, or is it just like grandma bought a little bit of Bitcoin, And like, is that really going to be what's stopping her from voting from one candidate versus another? I don't think so. But there are, a fair amount of people who do really feel strongly about this space, but I don't think it's the only issue on everyone's minds.
Yeah, no, the grandma example sounds weirdly close to home. That sounds too specific to just be a random example you pointed out there. So shout out to Grandma Melanek if she's holding Bitcoin.
She does not, but yes.
Okay, well then we've got some work to do, Jackie. But on the other side, there's not just politics to watch here. There's also a little bit of beef brewing in the stablecoin space over the weekend, and now, basically not too long ago, we're going to get into the response from Tether CEO Paolo out with some shots on Twitter, responding to Brad Garlinghouse's call that Tether will be eyed and gone after by U.S. regulators. Just want to play a little bit of the clip that we have from Ripple's CEO Brad Garlinghouse, who's on a podcast saying that. Texas, let's play that clip.
The U.S. government is going after Tether. That is clear to me. I view Tether as a very important part of the ecosystem, and I don't know how to predict
the impact that will have on the rest of the...
Right.
Yeah, so Jackie, just some context here, right? We got Ripple coming out, who had recently announced they would be launching their own stablecoin, basically entering into that market. And Tether, market cap right now, north of $100 billion, definitely the largest stablecoin out there to, well, I guess Ripple's going to have to take them on head first. But it is interesting to hear Brad Garlinghouse call out Tether as maybe one. And of course, they've already had their issues with New York's Attorney General Letitia James coming after him in Bitfinex years ago. But I'm curious to hear your thoughts, I guess, on maybe a stablecoin war brewing as we have Ripple entering the arena and calling Tether out.
Yeah, as you mentioned, Ripple also has the plans to launch its own stablecoin, so that could be a play in their strong stance on Tether and stablecoins as an important part of the ecosystem, but also marketing that they are going to get into the arena and kind of try and build theirs themselves to become a big stablecoin player. I feel like it's not really a game of like chess, but more checkers because Ripple's stablecoin is going to be significantly smaller than Tether's, especially in the near term. Tether's is the largest, like you mentioned. I think it has like $110 billion market cap. That is not a small amount by any means. It is the largest stablecoin ahead of USDC, third largest cryptocurrency behind Bitcoin and Ethereum. So it's a massive part of the crypto ecosystem. And I feel like kind of going after it is like a new exchange going after Coinbase. You know what I mean? Obviously,
Yeah.
Ripple is a big player in the space, but their stablecoin is not yet. And I think it was kind of a marketing tactic.
Yeah, it's interesting. I mean, you talk about USDC. They got all wrapped up in that Silicon Valley Bank problems of yesteryear, or maybe that was actually, was that
That was
2022?
last year, right?
Okay, last year. I was
It
going to
was
say,
early
time is
2023,
hard
yeah.
to track now. But if you look at their market cap, as we bring it up here, they really haven't yet recovered or reached that new all-time high. Used to be around 55 billion, still working its way up. But you're right. I mean, USDC is essentially the stablecoin that everyone in the U.S. would know because of how integrated it is with Coinbase and their involvement with USDC. So Ripple would have a long way to go to kind of battle them and battle Tether. And if you look at what Paolo said, this is Tether's leader in their camp. I believe, Jackie, we were talking about this before. We believe he was talking about Brad Garlinghouse here, but doesn't call him out by name, saying an uninformed CEO leading a company being investigated by the SEC, shots fired, launching a competitive stablecoin is being reported spreading fear about USDT. Now, to be fair, I think all he's saying is that it's very important to the ecosystem, and he thinks that the U.S. is going to go after Tether. I think a few other people have been talking about that just because of how important it is to the crypto ecosystem. And as U.S. regulators see it continue to get bigger and bigger, it doesn't take, it's not a real hot take to come out and say that that would be the one they go after. But we've seen before, Tether has had to settle with New York, as I said earlier. Part of that settlement require them to put out quarterly updates, which they've maintained. And it helps, I think, in terms of people trusting Tether. But we're going to get into this in a second. A lot of stable coins have failed. So it's not as if just because Tether's been around, by the way, not even 10 years yet, it'll be 10 years in October, that it's without risk, that any of this could kind of unravel at any time because of what the US or other regulators might want to do. But I don't know how you look at it. Clearly, we would both agree that it is the backbone of crypto.
Yeah, I mean,
think.
Tether has been criticized in the past for its lack of transparency, quote unquote, when it comes to the USDT, sorry, not USDC, reserves. And it has, more recently published those third-party audits, like you mentioned, and a new bill from the House Financial Services Committee, Democrats, sorry, world's longest title, is expected to target large crypto mixing services and money laundering, according to that Democratic Representative Sean Casten. And the reason I bring that up is because he also noted his concerns about the offshore issued stablecoin Tether, as he puts it. And he reported that it's backed by like Russia's war machine and has been used for funding Hamas. And there's just like all these political arguments against Tether that kind of link it back to, I guess you could argue, terrorism. And so I think it's a bit of an unfair thing because in the world of crypto, these things can be used for anything and everything. But I don't think the US government likes that argument that it is like a free market.
I don't also know how closely you've been watching some of the other stable coins to come out. I think for me, having covered Terra in that collapse, it's just always one of the more interesting things to watch because so many people try and do other things beyond Tether, right? Tether's pretty simple in terms of, hey, let's just hold a bunch of money in a bank or other assets that can be easily traded and back it 1-to-1, as they now do. But when you look at other attempts, Athena's another one, Jackie, that has gotten quite a bit of attention. Their market cap now about $2 billion. It took them just a few months to get from start to $2 billion. That's like half the time it took for Terra to get there, and they're basically backing their stablecoin with derivatives around Bitcoin and Ethereum. And anytime you have something like that, I think it's exciting to watch because it's way different than just hold cash in a bank, but also doesn't come without its own risks. And people can't help themselves. You're watching Tether print billions of dollars in profits every quarter. It's like, it's hard not to want to get in that game. And I wonder, without regulation, what would stop someone from just coming out and introducing their own stablecoin and trying to get in that game too, which is why I think we're seeing Ripple do so.
Mm-hmm. I'm not deeply well versed in Athena, so I don't want to talk too much about that, but I'm curious what would drive people to go test out a new stablecoin opposed to the ones that are already well established. Is there a financial incentive? Do they see the promise and the innovation? What kind of drives people to something new and shiny? Typically those categories, but I defer to you on that.
Well, let's defer to Deutsche Bank because it's the last thing that we've got to wrap up this week on the show, Jackie, because they're out with a new report that was looking at, I guess, the risks tied to all these things. And I do think it is, it's a long time we're spending on stablecoins now on this show, and I'm just realizing it as we hit another stablecoin story here. But their whole warning is that $150 billion asset class, essentially, if you add up, I guess, kind of the idea of where all of this could go, they dug into a bunch of different pegged currencies dating back to like 1800, because that's essentially all these are. You just got a digital asset that's saying, look, this is a digital dollar, and somehow they're trying to defend that peg. We saw that Terra could not do that. And they studied 334 currency pegs since 1800, and Deutsche Bank said they found only 14% had survived since that time. And I think it's fair to maybe say that stablecoins are that, and Deutsche Bank saying that many are destined to fail when you look at them. And like I said, there are Lindy effects. If you've been around for a while, more people think that you're going to stay around. Tether is now at 10 years old, but none of these things are guaranteed. And if you listen to Deutsche Bank, they're saying, hey, just be careful out there. A dollar is not necessarily a dollar unless it is a dollar. And I think maybe it's a fair warning to consider and remember, especially if you're in the camp like moi, who got burned from the Terra collapse, and other people out there too. I think it's just an interesting report from Deutsche Bank to basically say, look, these things aren't without risks. Don't believe stablecoins are always worth a dollar.
Yeah, of course, the Terra Luna situation caused a depegging, and there was a time when USDC dropped below a dollar. Tether also did at some point as well, I think in 2017. It's safe to say there isn't enough data for us to decide whether or not that the study by Deutsche Bank is destined to fail, like they said. The stablecoin market is relatively young and nascent, and I think it's just a matter of testing these things out for years and decades. Like, we had the gold standard for so long, and that was before you and I were born, but that existed in the world, and people saw that as something that would, exist for years to come, and then they kind of got rid of it. They did get rid of it. And so I think the market kind of reacts in a way that is cyclical in nature, but it also shows that some things that are popular now might not be popular forever. And I've joked in the past that the name stablecoin is kind of misleading sometimes because it isn't always naturally at that $1 ratio. And so it is a camp to help people store their cryptocurrency in a way that doesn't require them to cash it out into their bank. And it's a really good way for you to kind of have a neutral ground. But is it going to fully be that forever? I can't guarantee that. And I don't know if USDC or Tether or any of these major stablecoin issuers can guarantee that either. They probably would argue that for the sake of their business, but as this report shows, a lot of stablecoins fail. So
yeah, and the age that they last is only 8 to 10 years, at least in the ones that Deutsche Bank analyzed in this report. So Tether being at 10 actually has lasted more than half. So that's pretty good in that sense. And, we'll see what happens in that battle. I think it's always fascinating to watch because you're right. As stable coins, as boring as they sound, they're actually not that boring. And it's where most of the money is in terms of the growth potential and opportunities. But we'll continue to watch that back and forth as Ripple takes on Tether and the rest of the camp. Jackie, we always pause here before we get into what you're actually working on yourself to see if there's anything that you're watching this week, because obviously all eyes will be on the inflation numbers we get in the CPI print this Wednesday. I think that that's one thing I would call out from my side. Not sure if there's anything else that you're particularly watching or interested in as we kick off what feels like week number 118 in this year, but what do you got on your radar?
Yeah, I actually was watching the Van Eck Market Vector meme coin index that they launched last week. I think that's super interesting. They did it with, I think it was 6 cryptocurrencies like Dogecoin, Shiba Inu, Dog with Hat, Floki, Bonk, and what was the last one? Pepe. And I can't believe I remember all of them, but it's so silly, but it's also so significant because a company like Van Eck creating a meme coin index, sure, it's not like the spot Bitcoin ETF, it doesn't have the approval of the SEC, blah, blah, blah. But it's pointing to the fact that they see value in meme coins beyond just them being silly memes and that they have some utility in the space for investors who want to get more exposure. Whether or not it'll be a successful index, I don't know, but I find that super interesting and just kind of comical that something that started as a quote unquote joke can actually get the attention of traditional financial institutions.
Yeah, and that was also, I think, maybe potentially the big hot rod issue of last week too, when everyone was kind of debating whether or not meme coins are a net negative for the space or a net positive. You had Chris Dixon on that, basically getting a lot of flack for saying, look, this makes our whole industry look not great. But yeah, I think, I don't know what to make of it either. And shout out to you for remembering every single meme coin in that index, which I think is actually quite impressive. Off the top of your head, we hadn't even planned to talk about this.
Yeah. I will, because I tweeted about it last week and I found it to be, and the allocations were different. I don't know the allocation numbers. That's where you lose me. But I think on the point of Chris Dixon, like they've invested in a fair amount of projects that have tokens. So of course he's going to have a stance on that, especially when he can't invest in these meme coins because they're honestly like Lone Ranger projects, or sometimes the developers abandon the project. You know what I mean? Or maybe again, just don't see utility in it. But I don't think everything in this world needs utility. You know, like some things are just there for pure enjoyment, community, and maybe for meme coins, financial gain. And that's not the end of the world. Not everything needs to have a bigger purpose.
Yeah, no, I think that's fair. I think that is fair. But let's talk about the bigger purpose you're now working on, Jackie, because I think it's kind of interesting and very cool in that I think it gets to the heart of, I think, real projects. I don't know if I use that in the right sense, but projects who want to announce things that they're working on and keep their communities informed, because this space has maybe historically not done a great job of doing that necessarily. So talk to me about why you decided to start with Pomp at Token Relations and improving, I think, that problem that has existed for quite a bit of time.
Yeah, so what we're doing with token relations is effectively helping blockchains, token projects, protocols, and anyone with a token communicate more effectively with their ecosystems. Obviously, out there, organizations have marketing teams to attract new users, PR, comms to talk to reporters, kind of build that narrative. And we're trying to hit like a third bucket of connecting these blockchains and projects that I mentioned with their ecosystems, which includes developers, partners, token holders, etc. The teams building on chain. There's so many different categories in each of these buckets. And what we've realized is that the public market has investor relations. And of course, that consists of products like earnings, webinars, and shareholder letters, and so on. And they perfected that in their own lens. But when you look at the crypto market, there really isn't a single business with direct and effective community or token holder communication. And that's really where we try to come in. Obviously, all these projects have Twitter, they have Telegram, they have Discord, and these are great ways to connect with their audiences. We're not trying to replace that, but they're very one-to-many, and it's blasting out communications to everyone all at once in a way that doesn't really segment the audience, doesn't really address them, and doesn't continue to build that relationship that makes these people long-term holders.
I'm looking at your partners here on the site, on the page, token-relations.com.
Very
and you got
level website.
Well, I mean, I think it's really cool because, again, there's not a lot of places to go to kind of get the updates from the sources. Of course, you can come to Coinage, but we don't cover everything all the time. And I think it's a little bit different, I guess, in keeping your community members informed and keeping them along for the ride. But you got Avalanche, Aptos, OP Stack here represented, Optimism. I mean, talk to me about, I guess, how you're looking to grow this and what the format's going to look like.
Yeah, so we have publicly launched with those 3 companies. Those were our launch partners, and we have a number of projects that are just going through the final stages. We can't publicly announce them yet, but you can imagine similar caliber. But then also, we want to make this a solution for all those categories I mentioned in the beginning, like the blockchains, the crypto projects, the protocols, new ones, established ones that might have been cool last cycle that aren't getting as much attention right now. We don't want this to be just a one-trick pony. We want it to be customizable and addressable to any project in the ecosystem that needs to better enhance their relationship with their ecosystem. So right now we have publicly launched with those three, but we plan to roll out more in the coming weeks. And we're really excited to do that and kind of create that relationship in this bucket that's been so severely neglected for so many years.
Yeah, how would you classify it? I mean, I guess obviously in the publicly traded and or I guess registered securities realm, you get investor updates every quarter. Is that a fair comparison point to what I think Token Relations is trying to do?
Yeah, we're trying to do it in a crypto-centric way, whether that is reoccurring updates on the blockchains or projects, quarterly webinars, biannual reports, etc. And then also just kind of getting to know who the token holders and ecosystem players are better. A lot of that is so opaque, and I know that's the beauty of the crypto industry is that you are allowed to be pseudonymous or anonymous, and people really don't get to know who you are. But I think building that relationship between the token holders and their token issuers kind of opens up the doors for possibilities of better communication, better engagement, and activation. Because if I was a token holder and let's say I was super interested in the developer space, I would want reoccurring developer updates. And instead of getting like these blasts that give me updates on everything in the ecosystem, imagine if like Avalanche, for example, could just go directly to their developers all the time and connect with them, opposed to putting out an update for all of their followers. I think it's a powerful way to better address the market and people who have a financial stake in the industry.
Yeah, and perhaps quite different than just having John Woo go on a bunch of different podcasts or hop on Coinage and talk about some things too. It's a different audience, and I think quite important. But it's not just the only thing you're doing now because, as I said, come from TechCrunch, nominated for an award over there, now continuing the podcast piece as well with your Talking Tokens podcast. So how does that fit into kind of what you're trying to do there in terms of, I guess, continuing that piece of not just the direct to their developers realm, but also everything else that we know Jackie for?
Right. Yeah. I mean, my whole career has been as a journalist up until this point, and I did have that award-nominated podcast at TechCrunch, and I really wanted to keep that going with an editorial umbrella under the Token Relations brand, and the name Talking Tokens is kind of, an extension of that, a little bit of alliteration. But for Talking Tokens, it's a newsletter, it's a podcast, it's twice a week, Tuesday, Thursday. You guys should go check it out. And we're basically bringing on like the biggest founders, market players, etc., but also up and coming startups that deserve the attention that they often don't get in this space. And I think it's just a really way to get to know founders better, hear their stories. And it's for people in Web3 who want to learn about more projects, but they might not be extremely well versed across the space in every single category. So we're making it an easy to understand way. People could listen to new projects that they don't necessarily know and hopefully walk away from it with something new.
Well, I'm excited for you, and I think it's a cool jump. And I think, obviously, as we just discussed, there's a lot of problems still out there. And for you to jump in with it, by the way, with Pump, we didn't even talk about that, but also doing this with him in kind of building out a way for these projects to speak more directly to their constituents. I think it's really cool. So you have to come back and let us know how it goes as you roll out and continue growing it. But Jackie Melinek, appreciate you coming on. By the way, even while she's feeling under the weather on the show. So thank you for coming on. Love having you on as always. You got to come back soon.
Thank you for having me, Zach. It was a pleasure.
All right, that's going to do it for us on this crypto recap. For Jackie, for everybody here at Coinage, appreciate you hopping on with us. And as always, you can check out Coinage.media for the biggest headlines and join in co-owning our project as well. It's going to do it for us this fine Monday. Have a great rest of your day, everybody.